Alrighty, guys. So it's looking like we're having another green day in the stock market, at least as of now. And mind you, we're only an hour in, so anything can change. But as of now, at about 10:30 a.m. on the East Coast, the indexes are ripping. The VIX is down. The metals are up. We got to break down what's going on. And of course, we have to go over stocks I'm looking at, charts I'm liking, and earnings reports that came out this morning. There's a couple. Let me see here. 3. So you're going to want to stick on throughout the video. So sit back, relax, hit that like button, and let's get into it. So let me just make my face a little bit smaller. I know you guys like looking at my face. I know, but we got to look at the we got to look at these charts. So let's take a look. Right now we have the S&P 500 up about 1%. But wait, the Russell is up 2.3%. So the small caps are crushing it. The Nasdaq's up almost 1.5% as the Dow is up 0.6%. The VIX is down now under 30. It's down 1.3%. And like I said, the metals are up a little bit. Gold and silver, they're up about 0.4, 0.5%. You guys can tell, I'm pumped up a little bit. It's a green day. I'm mumbling and jumbling my words. So let's take a look here what's going on. We have SPY up, again, 1%, like I said. But even more importantly, forget the 1%. It is now breaking out of the highs from earlier this month, about 3 weeks ago, where we hit about 380. Do you guys remember? I've been talking about 380 a ton on the channel, on YouTube, on Patreon, pretty much everywhere that I'm making content, right? I've been talking about this point, and we're breaking it out right now. We're breaking out of it right now, and it looks like we're not fully, obviously, filling the gap yet. I mean, we could potentially get to 400, 405, 415, and of course, a lot of that is on the shoulders of the big tech earnings coming up this week, which, if you didn't know, starting today, later today, we have Google, Microsoft. Tomorrow we have Meta. We have Amazon and Apple later in the week as well. So it all depends. If these earnings bomb, pretty much everything I'm saying right now is going out the window. But if these earnings are better than expected, you bet your you-know-what, we might be getting a push, a rally, extended rally in the short term here on SPY, maybe towards, 400, maybe even higher than that. At least to 390, 395 in the very short term by the looks of it. That is where SPY could be going, at least in my opinion. And of course, I'd love to know your thoughts, any objections down below in the comments. Seriously, let me know, guys. So SPY's looking good. I mean, it's starting to break 380. What more could we ask for in the short term if, we want to, or if we're looking at this from the bullish perspective, right? It's looking good, right? And triple Q, if I pull that up, let's see what this is looking like. If you guys recall, I think yesterday it closed, or maybe the day before that, trading day before that, it closed under the 180 SMA, but now it's clearly breaking out of there, and it's not quite yet breaking out of the highs from the beginning of October, again, like SPY is doing now. It's not quite there yet. Those highs were at 285. We're now at about 282-ish, but one or two more green days, guys, triple Q could be breaking out of there, and again, I mean, we have Google and Meta, or not Meta, Google and Microsoft after the bell today, and what are they, big allocations of? The NASDAQ 100. You know what I mean, right? They're big percentages of the NASDAQ 100. So if Google, Alphabet, and Microsoft, they crush earnings, those stocks gap up after the bell, triple Q is probably going to be breaking 285 just like that. But again, who knows? Who knows? Are these earnings going to be better than expected? Are they going to bomb? That's the million-dollar question, right? We have to be very mindful of that, and just keep an eye on 285. I'm telling you guys, if that point breaks on triple Q, we might be moving, mid-high 290s, and then if that point were to break, we could be back to 300 fairly quickly on something like triple Q. So those are some quick thoughts right now as we're about an hour in, and let me pull up the intraday chart, guys. Let's see what's going on here. I mean, look, this is pure bullish momentum. What more can you say? This thing rallied all pre-market pretty much. It saw a nice pop. A lot of volume came in the morning, right in the first couple minutes here. And then it pulled back, slowed down about 10 minutes in, and then boom, it had its second run up. It had a 1.1% rip, and now it's just cooling off. It's coasting a little bit. It's been coasting for the past roughly half hour to 40 minutes. And, we'll see what happens at this point. Does it rocket out and start taking the highs out from about an hour ago, 283, and this is triple Q, by the way, or does it dump and fill the gap to about 280, which is right by the 180 SMA here on the intraday chart? And for SPY, it's pretty much the same thing, right? It rocketed up, Now it's kind of cooling a little bit, slowing down. It just hit a high actually about 5 minutes ago. But look, you guys see what I'm saying? We have to see what direction we pick. Do we dump down and start going down to 380 again? Do we fill that gap to 380? Or do we take out 383 and continue this run that we've been seeing so far? So keep your eyes on those levels, guys, this morning. And let's get into these earnings. We might as well get into these earnings. And by the way, if you haven't gotten your 15 stocks from Moomoo yet or your 12 stocks from Webull, free money, guys. Read the details down below. Deposit, I think, at least $100 on Moomoo, which then you could take out if you don't like the platform. And you keep up to 15 stocks, each up to $2,000. And on Webull, deposit any amount of money. You get 12 stocks. And if you don't like Webull, you can take the money out. And I'm telling you guys, I have, accounts on both of these platforms. I like them. They're good. They're good. My main is Fidelity. I've said that before on the channel. I'm not going to BS that. I mean, I've told you guys that a ton over the years that I've been making YouTube. Fidelity's my main. But, for some side trading or whatever, charting, Moomoo, Webull, I like those. So get your free stocks linked down below. And with that being said, let's get into UPS, which just reported earnings. And my gosh, it is up a whopping 3.5%, which isn't much, honestly. But hey, it is green. It's moving up, which you haven't really been seeing a lot of up moves in these, in these stocks, UPS, FedEx, right? You guys know what I'm talking about. But now it looks like we are ripping towards the 180 SMA on this 4-hour chart. The inverse head and shoulders we talked about is playing out. And this is going to be a big sticking point at about 175, 180. It's going to be tough for this to break out of there, in my opinion, at least in the short term, even though, guys, they ended up beating EPS. They did $2.99 versus $2.87, and they affirmed their revenue guidance for $102 billion for the year. The estimate was 101.7. So even though they did that, it's still going to be tough to break out of there, in my opinion, especially because it's so overbought. Maybe not so overbought, but it's pretty overbought, fairly overbought in the short term. It's ran up 13% in the past couple of days. RSI screaming red, not screaming red, but it's getting there. It's pretty much at 70 here on the 4-hour chart. So UPS, they're looking decent in the short term, but again, it's coming up to a point where I would not be surprised if selling came in. And I forgot to mention, they missed on revenue. 24.16 billion versus 24.42. So what do you guys think? I mean, a lot of the selling pressure obviously came in when we got that warning from FedEx. That got a lot of people got out of this stock too. I mean, they're competitors, UPS, FedEx, but they're in the same industry, right? So this thing got destroyed. And a lot of the bad news was probably priced in. And honestly, people don't care that they missed on revenue. I mean, again, that was probably priced in. The fact that it went from 211 to 150 in the span of 2 months, that's a 30% drop almost. Yeah, you guys do the math on that. But now, again, in the short term, it's run a little bit too much, in my opinion. Sure, it could go up a little bit more, but it's approaching overbought status. Keep that in mind on UPS. We also had Coca-Cola report, guys. You saw Pepsi a couple days ago, last week, whenever that was. They reported. They did well. Coca-Cola also did pretty well. 69 cents versus 64 cents estimated on earnings per share. And they ended up beating revenue as well, $11.1 billion versus $10.49 billion estimated. And they raised their full-year guidance for, I believe, was it organic? Yeah, organic revenue growth. They now see it at 14 to 15%. Not bad. And now with these earnings, it's up about 0.75%. Nothing crazy. It's also a little overbought, honestly, guys. But the difference between this and UPS, just looking at the technicals, right? UPS has not broken that 180 SMA, and it's overbought. But Coca-Cola has actually taken out that 180 SMA, and it's actually been pulling back a little bit from that pre-market high where it was almost at 60. Now it's at 58. So let's see if we cool off here, maybe consolidate at about $58. Then maybe we make a move and try and take 60 again. Well, we didn't get 60 exactly in the pre-market today, but will we try and go for 60? Will we break 60? You guys can see my alerts actually at $61. So shout out to Coca-Cola. They did pretty well. Not too bad. Double beat. Raised guidance. We also had Raytheon report. They ended up doing $1.21 in earnings per share versus $1.14 estimated on revenue of $16.95 billion versus $17.28. So they beat EPS, missed revenue, they raised their adjusted EPS guidance, and they lowered their full year 22 sales guidance. So kind of a mixed bag earnings there from Raytheon. You guys can see clearly it's still downtrending over the past couple of months, even though it's still above or it's trading above these moving averages, and now it's down about 2% after these earnings. So who knows what it's going to do in the very short term here. I'd be watching heavily the mid-80s, mid-high 80s as support. You guys can see buyers are already trying to come in there. If you look on the intraday chart, we are starting to see a little bit of support at about 87, 88. Let's see how it plays out, guys. And we also had GM. Do you guys remember GM? Yeah, they reported 2.5% green day so far for GM right now, and their EPS came in at $2.25 versus $1.89 estimated on revenue of $41.89 billion versus $41.77 billion estimated. So they beat EPS, beat revenue. I just got MicroStrategy alert. Wait a second. I know this is a little side tangent here, but let me see. MicroStrategy. Oh, look at that. That's starting to move. Now it's up 5.6%. And this is one of those stocks that I mentioned in my high short interest video that I made probably like a week and a half ago, whenever that was. I don't make those often, probably once a month or every 2 months, if that. But I talked about this one. We called out the inverse head and shoulders. They're starting to move now. So if MicroStrategy starts taking out, let's say 260, 270, it's a little bit risky. I'd say, honestly, it's very risky, so keep that in mind. But there could be more upside from there. So GM reported they double beat. I like that. Not bad. And overall, I'm not, jumping to trade this, but I have my alert at $42. Might as well put another one at about, let's say, 38, and we'll see what it does from that point. So what do you guys think? Let me know your thoughts in the comments. Do you own any of these stocks? And if you stuck till the end, we might as well go over two other ones that didn't report earnings but are moving right now pretty nicely. PayPal's up 5.5%, and it's still in a downwards channel. You guys can see that. In fact, we're now at the top of this channel, so it's kind of the moment of truth. Are we going to get selling pressure here at about 90 to dump this thing back towards the low 80s, maybe even the 70s again? Or do we end up seeing a huge wave of buying? We break the channel, we take out mid-90s, which at that point, that'd be a point of reversal for the bulls, in my opinion. So what are we going to do? That's the million-dollar question. And we have earnings coming up, it looks like next week. So we got some, we've got some time. We have this week, I think early next week, that might be on Tuesday they're reporting, so we have Monday potentially. So a move could be made before earnings is kind of what I'm saying. So keep your eyes on PayPal. My alert's at 95. Might as well put another one at 85. Mark is at or below $85. We'll see what it does from that point. And the last one for this video, guys, is Coinbase. Coinbase is up 6.5% right now, and this pattern doesn't look all too bad. We can see clear higher lows have been made, but obviously lower highs as well since the beginning of August. That's clear as day. But with today's move, we're cracking 70, up 6.5%. We're actually breaking out of the moving averages as well. I don't want to say we're for sure going to break out, but we're going to try and test it. $75 is where we've been struggling in the very short term. If I zoom in here, since the beginning of this month, so all month, 75 has been a resistance point. Let's see if we break that. If we break that, we'll be at a multi-month high or multi-week high. We'll take out the wedge. That's where I'm going to be looking for Coinbase. So with that being said, guys, I hope you all enjoyed the video. If you did, hit that like button. Feel free to subscribe. And, of course, get your 15 stocks from Moomoo and your 12 stocks from Webull. All the details are linked down below. Or go to stocksurfest.com/Moomoo and stocksurfest.com/Webull. And all those links, guys, just know, help out the channel. And with that being said, cheers. I will catch you in the next video. I appreciate your support. As always, peace out.